While initially it looked like the stock market would do well this week, shrugging off higher than expected inflation numbers from both the CPI and PPI report, that all turned around on Friday. The United Auto Workers ended up striking, and unlike what many analysts thought, they ended up striking against all three companies, Ford, GM, and Stellantis. Analysts had originally thought that GM and Ford were going to be able to settle with the union. However, that didn't happen. From here, all three auto manufacturers do have quite a bit of inventory, so they could last long enough that this wouldn't dramatically affect the US economy. However, if the strike ends up lasting longer than people expect, it really could impact the US economy and thereby also cause stocks to sell off. The big catalyst next week is the FOMC meeting on Wednesday. And while no one really expects Fed Chair Powell to raise rates, it's possible that he could do so. And if he did, because it's not an expected catalyst or outcome, it really could upset stocks even further than where they were on Friday. In addition to the FOMC, the European Central Bank and the Bank of Japan are both making decisions about interest rates next week as well. Additionally, the political rhetoric around the US budget negotiations has started to heat up this past week. And as we go into the end of the month, there is the possibility of a government shutdown. Investors did shrug off the debt negotiation talks from earlier in the summer, so it's possible they'll do the same here. But if they don't, it is yet another possible catalyst to the downside. Bitcoin had a rough week this week. It ended up breaking through the support that we were talking about over past weeks at $25,150, making a new low here at $24,915. Now, the bulls will argue that since that's higher than the low that Bitcoin made in June at $24,750, that this is a good sign. It shows there's a lot of buyers at that level. And even though Bitcoin did end up rallying a 7.7% gain from that bottom, you can see that it has once again impacted that bearish parallel channel that we've been following for weeks now. Additionally, the technicals indicate that Bitcoin is now trading underneath most of its moving averages. And this is not a good sign, because when you fall below support, it turns into resistance. You can see that this week I added some bullish channels as well, so that we can see the support in addition to the resistance. And as we move forward, Bitcoin seems to be stuck between the bearish downward channel and the bullish upward channel. So from here, for us to have a bullish breakout, it needs to break the new high at $26,850. Also, for the bulls, it needs to maintain its support at $24,915. If Bitcoin breaks either the high or the low, the momentum will carry it much further on from there, since we have been consolidating in this range for some time. Over in my investments in play portfolio, Canopy Growth Corporation was once again the winner, now a hat trick, having been the biggest winner in the portfolio for 3 weeks running. Canopy gained another 44.88% this week, and the moves are really exciting. However, I'm not going to hang my hat on the thought that this could continue at this rate. Part of the reason Canopy is seeing so much more volatility than the rest of the cannabis sector is because it is a relatively low-priced stock, bouncing around the $1.50 mark. If I didn't already have a position in Canopy, I'd make sure to manage my risk by only risking money I'm willing to lose in its entirety. Now, while this is true for any investment I make, it's particularly true with Canopy. Because it has financial irregularities, it could go bankrupt. Even still, this week's biggest loser was Dutch Bros. After announcing a $300 million equity offering last week and having investors seem to react positively, it's like they woke up this week and realized what that meant. Dutch Bros sold off 8.23% and ended up flipping itself negative for the year as well, thanks to that loss. I do believe in Dutch Bros for the long term, and I think that equity offering is going to be good as it's going to support Bros' growth. However, right now, it's not a good thing, and investors are starting to shake the stock. Over in my speculation and play portfolio, this week's biggest winner was the Uranium ETF, with governments all over the world finally supporting nuclear power and realizing it may be the only transition fuel we have to a green energy future. Uranium hit a record high this week. As a result, all of the stocks that have anything to do with uranium that make up the ETF rallied as well. The ETF ended up popping 9.06% and was this week's biggest winner. This week's biggest loser was Virgin Galactic, which continues to crash land. A lot of investors are worried that Virgin Galactic won't last long enough to be able to make a profit. While it's true that it is generating revenue right now, they aren't making a profit. They have a lot of debt, and with the interest rates as high as they are, it's possible that when they renegotiate that debt, it could be detrimental to the business. Virgin Galactic ended up selling off 10.48% this week. and was the biggest loser in the speculation in play portfolio. To learn more about long-term investing and to see my own shopping list of all of my positions, including my next buy price target, check out my website getirked.com, which is always 100% free. Please hit like and subscribe. It really does help my channel out. And I'll see you in the next video.